So, good day to everyone. You're all welcome to our channel. Today's here is pros and cons accountancy tutorials, and my name is Edward. So we want to continue with our session on IAS 40. I think the last time we looked at IAS 40, and we were able to deal with the talk about the definition, the initial recognition, the initial measurement, and the initial measurement we dealt with the cost model, right? We dealt with the cost model. So we want to, sorry, the subsequent measurement we dealt with the cost model. So we want to deal with the fair value model today. I think we're able to solve some questions. So we want to continue with our scenario on fair value model. So now the explanation we gave on fair value model is that unlike the revaluation model, where revaluation gain for the first time will go to your OCI, and a revaluation loss for the first time will go to POL, where a subsequent revaluation loss, where let's say you've gotten first time revaluation gain, you go and subtract the loss from the gain. All these complexities, we don't have it under what investment property, IAS 20. So for IAS 20, we are only going to compare how much we are keeping it in our book with the fair value, and then any loss or gain on fair value, we will take it to our POL. So that makes things very, very easy under the IAS 40. Take the loss or gain to the POL. So at the end of the year, you check for what? A fair value gain loss. Then you take it to POL. That's the whole idea on the fair value model. So fair value model, I must say, is very easy. It's very easy. So the last time, the scenarios we were looking at, we were able to look at scenario 1, 2, 3. So it's left with read the limit of the fair value model. So let's try and then read out this scenario and then deal with it. We have about 4 or 5 scenarios to deal with. So once we are done, I believe we'll be able to understand the fair value model, right? So Cape Coast Limited acquired an investment property 1st January 2003 for 6 million. The company applies the fair value model. And one thing we have to know is that fair value, there's nothing like depreciation. We mentioned this during our part 1 of the IAS 40 video. So please, I would advise you try and then watch it before you continue with this one, which is the part 2 on IAS 40, the using the fair value model. Okay, so Cape Coast Limited, we are saying that it has acquired an investment property for 6 million, and it was acquired on 1st January 2023. And then the company applied the fair value. Right. So if you look at this, we are saying that on 31st December, which is the end of the year 2023, the fair value was 6.5. So good for us. We've gotten a gain as of December. So we recognize that gain in our P or L. So the asset itself will be 6.5 at the end of the year, but you'll get a gain on it at what? 500,000. On 31st December 2024, this asset, which is 6.5, going to the market, you saw that the fair value had dropped to what? 5.9. So there's a loss by how much? A loss by 600,000. And that 600,000 will go into our POL. Now, what will be the effect in the POL? Please, POL is for 1 year. So the gain that we are getting in 2023 will go to POL, 2023 POL. And the loss we are getting in 2024 will go to 2024 POL. So the effect, the net effect will happen in where? In the retained earnings. Because all profit and loss goes to what the retained earnings. So the net effect will go to the retained earnings. You don't have to say that last year it was profit, this year this, so I have to cancel. No, just take it there. The effect should go to what? The retained earnings. Because with your POL, the profit or loss that you are getting at the end of the year will go to the retained So let's deal with this question. So we are dealing with a fair value model under IAS 40. So question 4, and question 4, which city? Because my question is about cities. So this is Cape Coast. Cape Coast. Cape Coast. So now the purchase price was 6 million. And then the fair value as at 31st December 2023. So this is 2023, January, was 6.5 million. And then the fair value as at 31st December 2024 was 5.9 million. And we are asked to calculate for what? The fair value, or we are asked to calculate for the fair value gain or loss in the P or L as at what? December 23 and then December 24. So now this is January and then this is December 2023. January and December 2023. So fair value brought forward so let me say fair value at beginning is 6 million, and then fair value at end is what? 6.5. So it means we have a gain. We have a fair value gain of 500,000. So if we go to our P or L, we have a fair value gain of how much? 500,000. But our financial position is going to have the investment property. Investment property of how much? 6.5. Let me write the investment property in full. To have an investment property of 6.5. So this is for 2023. Let's go to 2024. So in 2024, we can see that the fair value brought down was how much? Was 6.5, because the 6.5 was as at December. So that will start in January, right? In January 2024. And then fair value at end is now 5.9. So the change is 600,000. The change is 600,000, and that is a fair value loss. Fair value what? Loss. So let's go to our P or L. If we go to our P or L, you are having fair value loss of how much? 600,000. And our financial position will have the investment property of how much? 5.9. 5.9. All right. So basically, that is how it's going to be. All right. Okay, so that is our question number, or our scenario number 4. Scenario number 4. Let's do it. Scenario number 5. Let's do scenario number 5. So scenario number 5 is about disposal of investment property. Now, when we talk about disposal of investment property, like I mentioned in our first video, our earlier video on IS for IAS 40. We said for disposal, we do not have any complexities as in IAS Part 16, where if you have revalued it before and there's any revaluation gain on it at OCR, you will need to now transfer to retained earning. No, that complexity is not there. So here, if we dispose, we check the proceeds and then compare with what? The fair value, right? The proceeds and compare with the fair value. Then we can take any difference or any gain or disposal gain loss to our P or L. So we take it to our financial statement, specifically the P or L. Now let's deal with this question. Sunyani Limited purchased an investment property for 3.6 on 1st January 2021. Fair value as at 31st December 2021 is 4 million. And then fair value as at 31st December 2024 was 4.4 million. On 1st January 2023, it was sold for what? 4.5 million with transaction cost of what? 50,000. Well, if you sell something and you make a revenue of 4.5 and you incur transaction costs, so this transaction cost will be the transportation costs, the middlemen that you have to give them money, sales tax, and those kind of things. Those are what? Transaction costs. So if I get 4.5 and these issues amount to 50,000, it means I have to subtract from the 4.5. So the proceeds will now be what? 4.450. That is basically the net realizable value. The net realizable value. So let's go and deal with this question. So we have question number 6 or 5, sorry. And question 5 is on Sunyani. Sunyani. Now the purchase price here is where is it? The purchase price here is 3.6. 3.6. And then the fair value as at 31st December 31st December 2021. So this is at January 21. So 31st December 2021 was 4 million. And then fair value as at 31st December 2022 was 4.4 million. And then it was sold. It was disposed at 1st January 23. For how much? For 4.5 million. And it came with a transaction cost. Transaction cost of what? 50,000. Transaction cost of 50,000. And we have to calculate the gain or loss on disposal. The gain or loss on disposal. So if we take the year 2021, you can see the purchase price, which is more or less the fair value at beginning. So fair value at beginning was 3.6. Was 3.6. And then fair value at end became what? 4 million. So we can easily see that there's a change of what? 400,000. This change of 400,000 is a fair value gain. So as at the year 2021, our P or L will have a fair value gain of 400,000. But our financial position will have assets, the investment property to do at 4 million instead of the 3.6. That is for 2021. When we go to 2022, The fair value brought forward. The fair value, let me say fair value at beginning, which will be the value, the value at December 2021, right? And that was 4 million. So fair value at end is going to be what? We saw the fair value at end to be 4.4. So 4.4 million. So subsequent gains, they are still getting a gain, 400,000. Gain of 400,000. So fair value gain. So our P or L again will have fair value gain of how much? 400,000. And our financial position will have investment property, this time around 4.4. 4.4. Let's go to 2023. So the year 2023, fair value at beginning, you can see that to be 4.4. And then fair value at end, you can see that to be, so fair value at end was how much? Fair value at end of 2023. So we don't have fair value. Okay. So the asset was actually sold at the end of December 2022, because 1st January 2023 is the same as what December 31st December 2023. So meaning there was a disposal here. In 2023, there was what? A disposal. So now let's find the disposal gain or loss. So the proceeds from disposal. So that's 2023 January. Proceeds from disposal was 4.5. Oh, that was 4.5. That was 4.5. However, the fair value as at that date, as at January 20, as at 1st January 2023 was 4.4. Was 4.4. Sorry. There was a transaction cost. So transaction cost was 50,000. So we have to subtract the proceeds that we've gotten. There was a transaction cost of 50,000. So 4.5 minus the 50,000 will give us 4,450,000. 4,450,000. However, the fair value as at 1st January 2023 was 4.4. What? 4.4. So it should tell you that this, our POL and financial position, we will have to do something about it. Isn't it? But what they say, let's see. They are asking for what was our disposal gain or loss. So our disposal gain, is going to be the difference between these two. Because you can see that it was 4.4. Now we've gotten what? 4,450. 4,450. So we have 50,000. We have 50,000. So our disposal gain is 50,000. Our disposal gain is 50,000. All right. Let's go and see if we can deal with the next one. So question number 6 is saying that on 1st January 2020, Accra Limited, so this is about cost model. Right, let's try our hand on it. Accra Limited acquired an investment property for what? 2.4. Useful life is 20 years. And it was sold on 30th December 2023 for what? 2.1. And we are required to calculate what the carrying amount as at 31st December 2022, and then gain or loss on what disposal. So if you look at this one, it's a straight line method. You have 2.4. You have given you what 20 years, right? So the first 2 years, they said we have to calculate for the current amount as at 2022. So the first 2 years, what is the current amount as at the first 2 years, right? Then when we finish, we will calculate depreciation because we will calculate depreciation again for 2023 because the assets had been used from 2022 to the end of what 2023. So there will be another 1 year depreciation that we subtract from that carrying amount before we compare with what the before we compare with the disposal process. So let's go and deal with this, and then we can move on. So question 6 is on Accra. So Accra acquired an investment property. So purchase price is how much? 2.4. And then useful life is what? 20 years. Then we have disposal. So proceeds from disposal. Proceeds from disposal is 2.1. 2.1. And we need the carrying amount as at 2022. This purchase was done on January 2020. January 2020. Right. And we need carrying amount as at 2022. So what then do we do? It means we will have to find depreciation per year. So depreciation per year will be equal to 2.4 divided by 20 years. So 2.4 divided by 20 years, 2.4 divided by 20 will give us 120,000. To give us 120,000, right? We have used it for 2 years. So carrying amount, so 2022 carrying amount will be equal to the 2.4 minus 120,000 times 2 years, right? So 120,000 times 2 years will give us 240,000. If we less from 2.4, we are getting 2,160,000. 2,160,000. Now 2023, it was actually disposed, but it was disposed at the end. It was disposed at the end. So what is the current amount as 2023 before it was disposed? So current amount, we are going to get 2,160,000. Useful life has not changed, so it will still be what? The same depreciation, minus 120,000. We are getting 2,040,000. So 2,040,000, and it was sold. So disposal. It was disposed for 2.1. It was disposed for 2.1. If you check, we are having a disposal gain of what? 60,000. So the disposal gain of 50,000, 60,000, which will go to our pure air. But it has been disposed, so only the 60,000 will go to our pure air, and we are not going to get any what? Financial position. Financial position. Right. But as at 2022, this will go to our financial position. And the depreciation will be what? 120,000 in our P or L. Remember the accumulated depreciation, which is the 120,000 times 2. That one, every year we calculate the depreciation of what? 120,000. So 2022's own is 120,000 in our P or L. All right. So let's deal with last question, then we can end our session for the day. So that is subsequent measurement fair value. where there is a continuous gain, you have been getting a gain. Remember, we made mention that regardless of the change, all the gains or losses will go to your P&L, right? So Kumasi Limited acquired property for 5.5 million on 1st January 2022 on a fair value model, right? So the fair value as at 31st December 2022 was 6 million. So if you check 2020 January to December, they've gotten a certain 500,000, right? And then fair value as at 31st December 2023, it has now gone up to what? 6.7. So they've gotten another what? 700,000. That is something which is good. So our POL as at December 2022 will have what? The 500,000, whilst the assets will be at what? 600,000, right? This 600,000 will go to 2023 January, and then we'll compare with the what? The end 6.7. So it means that year POL, which is 2023 POL, will also have 700,000, what? 700,000 gain on fair value. But the asset will be valued at what? 6.7. That brings the gain of what? 700,000. So basically, all this will go to your POL. I think we should be able to deal with this issue based on what we've done earlier. All right. Now, question number 8 too, almost the same thing, but with question number 8, along the line, you got a loss. Along the line, you got a loss. So Tamale Limited acquired property for 8 million on 1st January 2022, going under what? The fair value model. So with fair value as at 31st December 2022, it was 8.6. So that year, we had a gain of 600,000. But going into December 2023, the asset came down to 7.9. So something which was 8.6, right? Something which was 8.6 has now come down to 7.9. So meaning we are losing what? 700,000. We are losing 700,000. And all will have its effect in our POL, whilst the fair value will be in our financial position. So this shows that investment property IS 40 is something easy that we should be able to do. So if you look at from IS 16 to IS 40, you can even see that 40 is very simple as compared to what? IS 16. It's my pleasure, right, to be with you. It has been a pleasure to be with you throughout this journey. And my focus is that you will be able to learn it, gain the knowledge, and apply, whether it is exam sake or work or professional issues. Please try as much as possible to watch the video, subscribe, and also share, right? Share for others to also get to gain the knowledge and enjoy what we are also doing. We actually appreciate the likes and the comments that you give us. Sometimes we get calls from other people to also share their ideas with us while we also share with them. We really appreciate all these things. So this is where we end our session on IAS 24, but that does not mean we are done. If you have any challenge, please, you can let us know. For us, this is where we are going to end the IAS 40 based on the videos. But if you have any challenge, please don't hesitate. Just put it at the comment section, or our numbers are there. Link up. Let us also link with you. We'll be glad to have a conversation with you based on issues concerning accounting and even taxation. Right. Thank you very much for your time. And I say bye-bye.